Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. With U.S. stocks set to close in just under an hour, the Nasdaq-100 is trading higher by over 3%, outperforming the other major averages, largely in part to the lack of energy exposure the index has relative to the Dow and S&P 500. Energy stocks took a hit as WTI crude dropped below $20 per barrel on plunging demand due to travel restrictions from the coronavirus. Joining me remotely, we have Chris Dearborn. He's a managing director on Nasdaq's market intelligence desk. With some technicals on the charts, we'll kick it off with the first one, the Nasdaq-100 on a daily. Chris, great to have you with me as always, although much rather be in studio on a Friday, wrapping up the week. But here we are. Let's take a look at the daily with the Nasdaq-100.
Thanks, Jill. I agree. I'd rather be in the office in Times Square, but we make do wherever we are, right? So
of course
the Nasdaq-100, the Nasdaq-100 has seen some recent resilience along with the broader market, hitting a 52-week low of about 67.71 last week, and started to bounce back a little bit here. What you're looking at here is strength in a number of different sectors, as well as a number of individual names. And a lot of that's being led by tech, but also oversold conditions in a number of the different consumer names, including some of the major airlines, which are listed on NASDAQ, such as American and United. Even though they are still trading close to their 52-week lows, off of those lows, which is when the NDX or the Nasdaq-100 made their low last week, it's still up 20 to 25%, giving this index a little bit of a broader bounce. So what you're looking at currently in the first chart is that some of that resilience that you're seeing. Now, we're still trading below our 200-day moving average, which is about 81.90, highlighted on the chart by the yellow line. But you can see that we're coming up into that area of resistance. Again, this is more of a short-term phenomena, and really kind of uncharted, unpredictable territories. You look for this index to continue to move on a day-to-day basis based off of the economic uncertainty due to the coronavirus or COVID-19. And with that, you're going to see day-to-day movements depending on what the news is going to be. Again, it's hard to model out fundamentals here. But again, looking at some of these larger cap names, that 200-day moving average of 81.90 is kind of sitting, looming overhead as resistance.
All right, if we take a little bit of a longer term out with the 5-year on the Nasdaq-100, seeing anything different there?
Absolutely. So remember, the 5-year weekly is a little bit more of a broader base stroke. And you can see highlighted on the yellow line on the bottom, that is the 200-week moving average. Now, if you look at December sell-offs and the other sell-offs that we've had in the past, including prior to the presidential election, the devaluation of the Chinese currency back in 2016, and this current sell-off, granted the move up has been dramatic, as has the move down, but that 200-week, moving average has been a consistent baseline for this index. Currently, it's sitting at around 66.15, and we have not penetrated that. As a matter of fact, the 100-week moving average is a little more intermediate, which is the green line on there, sitting at about 7,600. We've passed through that, which was a near-term resistance level, is now acting as a support level. So what you're looking at here is essentially a trading range for the NDX until something else comes along. And with that, it's a question of whether it's containment, whether it's a cure, or some other item that could be viewed very positively. The trading range set is really 75.60 to 8,006. And that's kind of where we've been for the last couple of days. Look for the index to continue to move back and forth as we evaluate what's going on across the board here. And again, trading volumes have been extremely high. For 2019, the average trading volume has been significantly higher than it has been in any other year prior. And with that, you're seeing, along with outsized moves, outside volume. So as long as the volume and the volatility continue, these are only small steps for the index to contain or to break through. Again, it can move on any type of news, good or bad, significantly, but look for this range to hold 75.60 to 8,000 until that news becomes either more negative or more positive.
All right, Chris, as always, thank you so much for joining me. Hope to see you back in the office soon.
You too, Jill.
All right, and thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.